Let's go right at it. ETH is money. This is a meme that has become very popular, especially in the Ethereum DeFi community. And really, the way that I've analyzed this or kind of evaluated it is basically what ETH is money is saying is ETH is good money, right? Because if we don't say ETH is good money, then I could say rocks are money, Cheetos are money, etc. But ETH is good money is really going at this idea of kind of what you talked about, like collateral, right? And in these DeFi systems, we're seeing Ether specifically being used for certain mechanisms or products and features, etc. Let's just start with agree or disagree ETH is money.
Well, I would say, I think the sort of meme on Twitter is that ETH would like to be money. I don't think anything in crypto is money yet. I don't think Bitcoin is money. And in fact, I think MakerDAO, DAI, the stablecoin, is probably the closest thing to money in anything in crypto. But
the market would disagree with that, meaning that Bitcoin, from a transaction standpoint, the on-chain adjusted transaction volume of Bitcoin last year was just under $1 trillion. Right.
Yeah, totally.
And so Maker, I don't know what DAI specifically is. It's not zero. It's definitely popular. It's like 60%, I think, of the value locked in DeFi is DAI. And so that's a real amount, right? That's not anything to kind of thumb your nose at. But at the same time, we're talking about, I think there's $1 billion locked in DeFi, right? So let's call it somewhere in the hundreds of millions of dollars versus hundreds of billions of dollars for Bitcoin. I don't think anything's even close to Bitcoin, but I will say that I've got a strong opinion that's loosely held. So hopefully, for your sake, you can convince me differently. But that's just kind of the way I think about it. Is like the market almost doesn't care about our opinions, and if you look at the data, the market's determined Bitcoin to be more of money than anything else. What do you think about that? Agree, disagree?
Well, I think they're all striving to be monetary assets, right? And so
the cryptocurrencies, not anything else, just the ones that want to be currencies, that's what they're striving to be.
Pretty much all of them. I think everything in crypto is locked in a battle to be a monetary asset, with the exception of maybe some of these like buy and burn sort of dividend kind of tokens, like MakerDAO. It's that Maker has a token that basically accrues value from DAI going up. It's called MKR, and they have DAI. So maybe MKR isn't trying to be money, but DAI is trying to be money, ETH is trying to be money, Tron is trying to be money, and they're all on a spectrum.
Tron?
Everything.
All right, go ahead.
Shoot your shot, do your thing.
Shoot your shot.
Everyone's shooting to be money. I mean, that's the innovation, right? Like, This is the cool thing about crypto, which is why it's so exciting. We came from the internet. My partner, too, he's a very famous VC in China who was one of the first VCs in the internet. The thing that's exciting about crypto is that it's permissionless innovation. And it used to be like no one could create their own TV network. That was just unbelievably, like nobody thought that was possible. Look at us now today, right? Look, Ma, we did it. It used to be you think nobody could create your own money. It's insane. It's the province of 200 governments, even really more like 20. Now anyone can create their own money. Good luck. It's not that easy. But certainly ETH is trying to be money. Bitcoin is trying to be money. They're still very far away from it. I think the market cap is just a sign that like it's the most valued digital asset, right? But an asset is different than money. I mean, it's not used every day as a means of exchange and so forth. Nothing really is. We shouldn't kid ourselves about that. If anything, Tether is probably the most used as a medium of exchange asset in all of crypto. I don't know if it's a strong store of value as Bitcoin. The amount of turnover in Tether is incredibly high. But so from the way economists think about it, the three things of aspects of money. In one sense, Bitcoin is much higher as a store of value. In another sense, DAI and Tether actually might be higher as a medium of exchange today.
So my big argument this week was that ETH is no different than a fiat currency.
Yeah.
Now,
that was controversial.
And that's fine, right? I have no problem having different thoughts than people, but the one thing to clarify here is I'm going to guess 50% of people who are yelling and screaming on the internet didn't read the article, which is like a problem in society in general. That's not a crypto thing. That's just like politics, social, culture, all this kind of stuff. But what I said in the article was the monetary policy of ETH makes it no different than a fiat currency, right? Meaning that there's essentially groups of people who make decisions on the monetary policy of the asset periodically. Now, what I will say is a positive for the ETH is money crowd is that every time that they have made the decision, they have made it in what many people would consider the quote unquote right direction, right? Meaning that they have decreased the supply of money. And so that is good in the sense of they're not going the opposite direction like a true fiat currency would. But structurally, the fact that this group of people can make that decision and it could go up or down, it's not kind of pre-programmatically decided, in my opinion, makes it no different than a fiat currency. Agree, disagree, think I'm an idiot?
Yeah, disagree.
Disagree. All right.
The reason
well, at
is
least you didn't
because
think I was an idiot, so that's a start.
I read the article too. I did
right.
read it, and I didn't trash talk you on Twitter. Yeah, no. So disagree because I think, certainly Bitcoin is ahead in that it has the most decentralized and sort of stable social consensus around its monetary policy. That's amazing. That's the best thing about Bitcoin today, probably by far. It's not leading in like technology or scalability or privacy, but it's got maybe arguably the most important thing, which is sort of this inbuilt scarcity. It's hard to fork that out. The problem with that, though, is, and this becomes a bigger problem with sort of new consensus protocols and so forth, is ultimately these networks have to be secure, right? And the monetary policy is the security of the network, right? And there's the biggest way that Bitcoin could fail today is basically Bitcoin is secured by two sort of cash flows, the security of it by mining. So the first is by block rewards, and the second is by a small fee that everyone pays to miners when they make a transaction. And a lot of the sort of simulations today of what happens if there's no block rewards, if it's zero, and if it's all just transaction fees, is that there will be serious security risks, and it'll be much easier to attack the network, and it'll be less stable. So,
just interrupt for a second. To be clear, that's expectations or predictions of what's going to happen in 100 years, 120 years, right? 2,140.
More like 20 or 30.
Oh, 2,100.
That's the way the halving is going.
2,140 is when the last Bitcoin will be mined, right? Give or take.
Yeah, but it gets progressively. I mean, as you get down to 3%, 2%, 1%, where are we now? 2.5 or something?
Right? I don't know. Yeah, something.
I mean, the lower it goes, the sort of exponentially more difficult it gets. And in fact, my colleagues, we have like a fairly large research arm. We did an analysis of how this relates to DeFi. And in fact, if you have this issue where if the lending rate, if basically the risk-free rate of lending out Bitcoin or Ethereum becomes significantly greater than the mining. This is actually a much bigger issue for proof of stake because you don't have to like buy mining equipment, and it's just a decision of whether you stake your asset or you lend your asset out. It leads to disastrous consequences because people won't stake and they'll mine and they'll lend it out instead. Actually, so that's not as applicable to Bitcoin, but it is applicable to Ethereum and any other proof of stake asset. So, like, I understand why Ethereum is doing this. They have to understand that, and they do understand that, especially if they move to proof of stake and new alternative mechanisms, the monetary policy has to be flexible for security reasons. I mean, what's going to happen if Bitcoin, even 20, 30 years from now, is like insecure and it's like easy to attack? Will the sort of social consensus of scarcity and the fixed monetary policy kill it? I don't know. I mean, that'll be a major decision for the Bitcoin community.
For sure. So going back to the idea that ETH is money, right, and it's no different than a fiat currency, why do you believe it is different than the fiat currency, right? And really my thought process was when you outline how is the monetary policy decisions and structure of a fiat currency decided, ETH looks very, very similar to me.
Yeah, I think we're all on a spectrum with fiat currencies because we're all creating our own central banks here. The main innovation in crypto, where anyone can create their central bank, is crypto is all about incentives. So the problem of central banking, the fundamental problem is there's two goals that the Fed and all Feds try to hit. One, reduce inflation to create a stable currency. That increases economic output and so forth. But 2, reduce unemployment. And those 2 things, and then also the third is that's sort of secret, but is also important, and is sort of tied to the second, is you get access to seniorage. And you get to basically, you get an unlimited amount of spending if you're the government. You could sort of print your way to freedom, at least for a few years in the short term. And these trade-offs...
Don't tell them that.
They know,
Well, they know.
Look at Trump's tweets. Look at how Powell is reacting to Trump. Powell was much more conservative before he became the Fed chair than after. It's sort of inevitable. We try to create these mechanisms of church and state to separate the central bank from the government. And often they work for a few decades, but no currency has remained stable for more than 100 years. So these basically, this is an incentive problem. These 3 things conflict with each other all the time. And governments have every incentive to sacrifice inflation to juice unemployment or to spend more money, especially in election years, right? But Bitcoin and Ethereum don't have that. Okay, there's no concept of unemployment rates that need to, if your monetary policy goes up and down. And it's miners that get the seniorage, and the miners today don't really have much influence or say in the sort of social consensus of making these monetary policies. So in that sense, ETH is a great improvement. Really, the only thing ETH today is sort of the only lever, the decision that is affecting their monetary policy is 1, everyone wants to be lower, and then 2 is security. And that's cool. I think the trade-off between, we're incentive to increase security of the network in this cryptographic way, that's a much cooler trade-off than we're incentivized to juice the economy whenever there's an election year. That's still a quantum leap ahead of all other fiat currencies.
Yeah, so just so people understand, Ethereum is obviously the network. There's Ether, the asset, and the monetary policy of Ether is something called a minimum issuance. And the minimum issuance is basically, is it every year? How often is the decision made?
I don't know. If it's
okay, so periodically they basically make a decision as to the rate of issuance that will occur until the next decision.
Yeah.
And so, again, kind of a positive argument for ETH is that they have decreased that every time. So it has acted similar to Bitcoin in that the Bitcoin halving.
Yeah.
The 2 fundamental issues that I have is, so fiat currencies, I basically outlaid 3 things. I said there's no fixed supply, there's an inflationary supply schedule, and the monetary policy decisions are decided by a group of people, right? So no fixed supply, inflationary monetary schedule, and the decision as to that rate is decided by a group of people. If you look at ETH, there's no fixed supply, it has an inflationary monetary supply or schedule, and it is decided by a group of people. Now, when you use that framework, which is a framework that in full transparency I made up, right? Then
it's pretty good. I like it.
Then you can apply it to ETH and fiat, and they look exactly the same.
Yeah.
In comparison, if you were to put Bitcoin into that, you would say that Bitcoin has a fixed supply, so it doesn't meet that first criteria. Now, it has a disinflationary supply schedule, meaning that there is an additional increase in supply every year or every day, etc. It is programmatically declining in time. Ethereum has done the exact same thing. So it's been disinflationary over time, but the difference is that Bitcoin is programmed to continue to be disinflationary. Ethereum could step in and say, hey, there's security concerns, and so therefore we are actually going to increase the rate rather than decrease it. And then the third is that the monetary policy decisions are decided by a small group of individuals. A big difference between Bitcoin and Ethereum, for example, is that there is a preset monetary policy with Bitcoin that is programmatic, and there is the possibility that people could come together with majority and change that monetary policy, right? That's kind of the social consensus you're talking about, etc. The difference is with Ethereum, that is not a preset programmatic monetary policy, right? And so there's kind of these periodic decisions that need to be made. Now, one, am I absolutely crazy for kind of evaluating it this way and using that framework? Or how do you kind of think through that framework as what's good, what's bad, and kind of what did I miss?
No, I think it's good. I think the thing you're missing a little bit is that it's all a spectrum. There are people at the end of everything. It's turtles all the way down. So Bitcoin is clearly optimizing for being as little controlled by people as possible. This is like Nick Szabo, sort of inventor of smart contracts, is this concept of like there's dry and like wet code, and wet code is messy and involves people and lawyers and so forth. Dry code is automated, and automation of decision making is it's like the bedrock of capitalism and our industrial engine. So it's great if you sort of automate away the decision making about how you change the monetary policy. If that's what you're optimizing for, if that's what you think is the best thing that creates the best money supply or the best store of value. I think that's possibly the case, probably. But Ethereum is optimizing for other things, which is that Ethereum is fast moving relatively. I mean, it's taken a long time for ETH 2.0 to come, but it's fast moving, it's dynamic, the other things that make something a good digital asset, money supply, like having built-in privacy or having scalability, whether at the layer 1 or layer 2, having programmability, like being able to allow a decentralized financial ecosystem to exist natively in a trustless way, tied to your currency and in your ecosystem, is very powerful. It's why, almost all of the collateral behind decentralized finance is ETH. It's not Bitcoin yet, because it's hard to do in a trustless way. So those things could make something a better money in a way. And having your monetary policy be decided by a group of people and be more flexible is a requirement if you want to optimize for that fast, for moving fast and being dynamic. So it's trade-offs, right? Clearly the market today values that the Bitcoin trade-off is the best. But actually, like you and I, we're pretty sure like the crypto ecosystem will be in the trillions in the next 10 to whatever, how long it takes. So actually the market is really telling us that the real solution has not been found. Like there's something missing, like you could kind of think of it like 5 trillion is like at max capacity maybe, right? Like when crypto becomes a true store of value. So Bitcoin is what, 200 billion? So it's like a 4% chance, or no, sorry, 40% chance, wait, hold on.
4.
Yeah, 4% chance that it becomes that the Bitcoin of today is the store of value of the future, right? That leaves a lot of room open.
But you could also flip that and say Bitcoin's dominance is at 65%, and therefore the market determines there's a 65% chance that Bitcoin is the winner. Right? Out of all of the options today, there's a 65% chance that Bitcoin is the winner versus everybody else.
Yeah, but I mean, that's not the real. It's like the real market size of crypto isn't what crypto is today. It's gold. Like most people still think it's gold, right?
Okay.
Yeah, like 90% of the people still think it's gold.
Yep.
So
it's called 7 trillion or so.
Yeah, right. So, but yeah, Bitcoin's in the lead, clearly. The market determines these things.
So here's my other argument, is that, and to be very clear with folks, I am actually a fan of what Ethereum empowers people to do. Mm-hmm. There's a lot of innovation that's going on, a lot of experimentation. I think that stuff is super important to kind of the health of an entire ecosystem, right? I am not, and when you ask about the maximalism, I am not of the belief that Bitcoin is the only thing that will ever be valuable, period, in this entire world, mainly because I come at it from the sense of the entire financial system is going to get rebuilt in parallel, and therefore it would be like saying, the U.S. dollar is the only thing in the financial system. No, there's credit, there's all assets, there's all kinds of other stuff that goes on.
So and they're mutually reinforcing.
Yeah, exactly. And they make the dollar more important, more valuable, etc. Right?
Yeah, because we have such an advanced financial system.
So if you think of the dollar as that base unit of account, I believe personally that Bitcoin will be the base unit of account of this future world. There'll be all kinds of other stuff that are built, but Bitcoin, because it's that base unit of account as money, it ends up being the most important, right? Because it's kind of the foundation, but there's a bunch of other stuff that is important that gets built. Ethereum today is helping to empower some of that to be built. And let's take the DeFi sector, for example. When you have decentralized financial products, you need to have some form of money, right, that is used in these products. Mm-hmm. The difference here is that while some people are using ETH, the most popular one in the Ethereum ecosystem is not ETH. It's actually DAI, right? And DAI is an ERC20 token, and kind of you get through the whole thing, but it is fundamentally different. On top of that, what you're seeing is teams work to bring Bitcoin and its monetary policy properties to Ethereum with TBTC, etc. And so, again, I go back, like, my opinion doesn't matter, your opinion doesn't matter. Frankly, the market's opinion is what matters. And the market is determining that in even just the DeFi world, there is something better than ETH as money, right? Meaning DAI. And also, there are teams that are going out to search, how do we bring the monetary policies of Bitcoin to this ecosystem?
Totally.
Let's stop there for a second. Agree, disagree? Is that the right way to look at it? Do you look at it a different way? Just walk me through that type of the analysis.
No, totally. It's I think DAI, like, I would reframe DAI as money, not ETH as money. ETH is collateral, ETH is gold. Gold is not money, you know? It's been many years since anyone's used gold as money. So, which is fine. Like, the monetary.
Don't tell Peter Schiff. Go ahead.
But again, like, I like the dollar. I like stability. I think the greatest crypto is about financial access, really. And the most wanted financial asset around the world is the dollar. I mean, you have these stats where like 90% or like some massive percent of all $100 bills or all bills in general is outside the US. Like, it's just so many percentage of countries are fully dollarized at this point. So just bringing the dollar to the world and bringing sort of the Fed's central banking policies to the world, that I think is where the next stage of growth in crypto is happening. Absolutely, you know. I don't think there's any doubt about that in my mind. So I'm sort of a stablecoin maximalist in a way when it comes to what is money. I think stablecoins will be money, at least for the next few decades.
Stablecoin maximalist. I haven't heard that before.
Heard it here first. No, I didn't invent it. But and so what that means is the asset that collateralizes the stablecoin is going to be very valuable too, through a sort of weird chicken and egg loop, though. And it's just like gold is very valuable because it's the largest, you know, it's one of the largest stores in central banks, you know, on balance sheets. So you know, the problem with Bitcoin and DeFi is that it's not programmable. So you can't have DeFi on Bitcoin. I mean, there's a few initiatives with sidechains.
I disagred, but go ahead.
Well, I mean,
we'll talk about it. Go ahead.
That's true today.
We'll talk. I disagree, but go ahead.
All
right,
talk sure. About it. But today, okay. I mean, it's it'd be so impossible to remake MakerDAO or Compound or something on Bitcoin natively. There's no trustless way to port Bitcoin onto the DeFi ecosystem. There's trusted ways to do it. There's wrapped Bitcoin, where some trusted entity, right? BitGo has one. Some other exchanges are thinking about doing one in the next few months. They basically just put Bitcoin on chain, and they show proof of reserves, and they issue like a synthetic Bitcoin that's backed, but just like Tether or something, really, or USDC. And they have like no traction at all. It's like a couple $1 million is in those assets. So clearly, I didn't like. A priori, I wasn't sure that would be the case. It seemed like, why would people use Tether? Why wouldn't they want to use a centralized wrapped Bitcoin? But this is the market's decided at this point. So we're waiting for a trustless Bitcoin. That's really, really hard. I've invested in a bunch of technology projects that will enable that, like Cosmos, and you have Polkadot interoperability chains. You have what Keep is doing, which is fantastic. But there's trade-offs. None of them are proven to be technically secure yet. They're costly, like they're not very capital efficient. You have to like lock up. I don't know what the latest is, but you have to sort of over collateralize and keep your with both Bitcoin and ETH. So that's kind of weird. Like, why would you want to, if you want to get a synthetic Bitcoin, that probably means you don't really want to hold ETH, but you have to hold both for security reasons anyway. There's a cost to that. So clearly today, that's sort of the ETH game, which is, can you be collateral for a financial system that is literally like 1,000 to 10,000 times bigger than the base financial system? Like, we know that from just looking at the ratio gold to derivatives market cap or something like that. And that's ETH's big play.
So there's this framework that I had, and
great.
we will I'll describe it for those that are just listening or watching at home. So basically, on the left side you have Bitcoin. On the right side, you have Ethereum, right? And around both Bitcoin and Ethereum is the infrastructure for those ecosystems. And so the way I think about it is Bitcoin is sound money, right, in the principles that are around that. But all of the infrastructure historically has been centralized infrastructure. So this is when you see the Coinbases, the BlockFis, et cetera of the world, right? So kind of sound money surrounded by centralized infrastructure. When you go to the Ethereum side, what you get is decentralized infrastructure with an asset that is unproven to be sound money today, right? So kind of I think the ideal world here is how do we have sound money with decentralized infrastructure, right? And so you have these two different worlds. Each piece has a part of that like utopia, and we've got to bring them together. Now, that brings the debate of, do you bring Bitcoin to Ethereum, which you kind of just described with TBTC, et cetera, and these wrapped, et cetera, or can you actually bring decentralized infrastructure to Bitcoin, right? I can't yet announce the name of the company, but I'm sure you've actually seen the company. We invested in a business that is essentially going to bring the lending capabilities of DeFi to Bitcoin, right? There's other teams that are working on other aspects of it. Do you think that the obstacles today to having sound money in Bitcoin with truly decentralized infrastructure around it, are those technical challenges that can't be solved? Are those what I call time and attention, meaning that we haven't had enough teams working on them yet? It just hasn't for long enough to actually get these solutions? Or is there something else that has prevented us from having that kind of full stack integration with sound money and decentralized infrastructure?
Yeah, I mean, this is
like the $1 trillion question.
Look, this is also the thing that makes most maximalists very uncomfortable to talk about, which is Bitcoin has not innovated in a decade. And
is that a bad thing?
Depends what your perspective is. It's
Okay.
certainly a bad thing for developers and for app makers. Like, imagine if, developing in the 1980s was way harder than being a developer now. The languages were way more difficult to learn. They were like assembly code. The developer toolkit was way more difficult. It was so imaginably more difficult to create software and software products. In the early days of the internet, when there was less tooling and libraries and so forth. And that's where we are with Bitcoin, and we haven't moved. So now, it's way easier to do it on Ethereum. It will always be continuously way easier, and in fact, the spread will probably increase. So you kind of have to yes, it's technically possible, I think, to do scalability and to create a pretty good, okay programming environment that can maybe do lending in Bitcoin. Maybe the project you backed is the one that's going to crack it. But ETH is flexible. It's moving, so it's always getting better and better. It's creating JavaScript when Bitcoin is still trying to get what's that old C Sharp.
But I think this is one of the key things, right? And this is where the Bitcoin crowd heavily disagrees with kind of the Ethereum crowd. I think the Bitcoin crowd would argue all of that development and speed and experimentation, etc., are actually flaws, not advantages, around one specific perspective. Money, you get one shot. And so on a spectrum between what I call sexy innovation, etc., and confidence level of sustainable store of value medium of exchange, on that spectrum, Bitcoin is as far to the confidence side as you can get. So it's very slow. It's very intentional. It's very much thinking through. We have $200 billion, give or take, in this asset. We can't fuck this up. All of the innovation, experimentation, etc., that's all great. But it can't happen at the expense of screwing up that core base unit of account. Mm-hmm. Now, I think Ethereum, what ends up happening is the speed, the innovation, etc., that crowd actually looks at that as an advantage, right? So they say, look, you've got to move, you've got to innovate, you got to do all this kind of stuff. They're optimizing for two different things. And I think what ends up happening is if you wanted to compare ETH as money to Bitcoin as money, right? I think most people would argue the Bitcoin argument in that specific perspective is probably much stronger than the ETH one. Mm-hmm. Now, when you go to the infrastructure side, the innovation, the sexiness, all the shiny stuff, etc., the speed, innovation, experimentation, all that is a much better way to look at infrastructure, right, than the actual base unit of account. And so that's where I actually think it makes sense to me, at least, and again, I'm hyper biased in all of this, that the developers would run into Ethereum where there was the possibility and empowerment to do all of that innovation around infrastructure, et cetera. Leave Bitcoin to be built slow, methodically, intentionally, et cetera, how it's been built. And then eventually you'll see those developers migrate over and build that same infrastructure that they did all the testing and experimentation in Ethereum to build that around what ends up being the sound money. It's almost like the sound money is a magnet for the infrastructure, but all of the experimentation is empowered on Ethereum.
Yeah.
It just eventually, like the things that work come to Bitcoin.
Yeah.
And I know all this is hyper controversial. People will literally be freaking out that saying I'm an idiot, etc.
Well, it's
that's
not
just my
that.
perspective.
I mean, these are complex systems, and we're
course.
sort of like, you've made like 6 assumptions, you know, that
Of
we
course.
just don't know. It'll take a few years to figure out, like technical risk, what. But yeah, look, I think it's possible, but clearly today, the other story, let alone Bitcoin, DeFi hasn't moved to any other ecosystem. It hasn't moved to EOS. It hasn't moved to Tezos or Algorand or anything like that. ETH is just controlling the narrative and controlling the, like almost every good DeFi project we back, good team, or even team that we look at is building on Ethereum. It'd be sort of nonsensical to not at this point in time from a business perspective. So you have network effects there. So you have to think, are the network effects and developer community and so forth strong enough that you can sort of bootstrap ETH into a stable store of value? Stable is a rough word in all of crypto.
So you're talking about almost like inversing it, whereas the Bitcoin argument would be you start with sound money, then you build all the infrastructure, the derivatives, other layers,
but you
et
have
cetera.
you start with sound money, but your infrastructure is always going to be significantly worse. I mean, at least 10 years behind, maybe more.
But
today it's 10 years behind, or 5, I guess,
No.
since
Hold
DeFi
on.
is sort of 5 years old.
Hold on, though. Here's the difference, though. The infrastructure around Bitcoin is 1,000 times minimum more popular and more robust than ETH. The difference is that the ETH infrastructure is decentralized. Like, if you compare decentralized infrastructure on ETH to decentralized infrastructure on Bitcoin, you're correct. If you compare just infrastructure, Bitcoin has a head start and won't get caught, right? Because all of the Ethereum infrastructure, the Ethereum specific infrastructure, is specifically going after this decentralized opportunity. But like Coinbase is originally Bitcoin infrastructure, right? BitGo is Bitcoin infrastructure,
But,
right?
But by the way, they've been co-opted by,
they expand. Yeah, absolutely, they expand.
The purest, the Bitcoin only, the ecosystem you're talking about, exchanges, custodians, market infrastructure, on-off ramps. There's almost none of those that are just for Bitcoin yet. Now, Bitcoin has much more liquidity, of course, much more pairs. But actually, ETH is doing a pretty good job. Even XRP
they're not at zero.
is doing a pretty good job.
Yeah. I'm not a maximalist in the sense of like, there's one.
Like Zappo and the
none.
original companies that were only Bitcoin, they've lost in the market. Coinbase got a lot of flack for when it launched a bunch of additional coins, but they're the market leader and they're the monopolist at this point. That's the way to do it. So actually, a lot of that infrastructure is there. Obviously, more infrastructure is there for Bitcoin, of course. But my point is that you need to be decentralized, right? Because if you just because you have a decentralized store of value doesn't mean, like, if you then give it to a lender or whatever, if you then lend it out in a centralized way, you lose 95% of the benefits of it. You lose you lose a lot of the privacy, you lose a lot of the censorship resistance. And that's important. I think that's important up the stack, just like it is at the base.
So from a theoretical perspective, I agree with you.
Yeah.
Right? There's 2 points that come into play now. Do we go from a centralized infrastructure around Bitcoin and those companies can decentralize over time? Maybe. I don't think we know that answer yet, right? And there's plenty of people who will pontificate on whether that's true or not. The bigger thing, though, is how much of the DeFi infrastructure do you actually think is decentralized?
Yeah, it's a good question.
I don't know the answer, and I actually don't even know if the answer is bad answer for the DeFi community. I just how do you even figure that out?
Yeah.
Right? Because it can't be 100%, but it's also not 0%.
Yeah, absolutely not. No, it needs to become more decentralized. There's a lot of sort of governance decentralization infrastructure that has to happen on the Ethereum community in DeFi right now. Like, how do you make a DAO, a decentralized autonomous organization, work at scale? How do you make oracles work in a decentralized way? That's very difficult.
Yeah.
Those are big challenges. They're technical risks.
Like something like a DAO, to me, if you can make it work in a secure, predictable way that people have confidence in, it would be massive. It would be incredible. It's just we got a lot of work to do to get there. And I think that you're saying the same thing, right? Of just like, this stuff is really, really hard.
Totally.
It's not going to happen overnight. And so that's why we need as many people working on it as we possibly can.
Totally. But I do think there is benefits to centralization at the beginning. Significant. And
Okay,
I think most...
explain that.
So you're building complex software. And the more complex it is, the more you need, like a corporation is the most authoritarian and centralized. Democracy or like a republic form of government for a corporation would be nonsensical. Like, you need to have an authoritarian top-down structure that's at least somewhat hierarchical. Silicon Valley is less hierarchical, whatever, but it needs to be pretty hierarchical in order to ship fast and have secure code and respond to customer demands and so forth. So I think, we've seen this trend where most of the DeFi projects, they start pretty centralized, and they're equity investments, and they have corporations or foundations that have sort of hierarchical. They build software the way that Microsoft builds software, and that's good because Microsoft builds good software. But over time, they will decentralize. So Compound actually just released its token, or announced it released its token a few weeks ago. It's just to existing shareholders like us. Compound is the second biggest or so. It's one of the biggest decentralized finance projects. It's basically a money market on Ethereum. It's actually one of the most sophisticated, probably working dApps today. They just released a token. And so they're moving gradually towards decentralization. I think that's great. I mean, there might be a period where the company dissolves. There might be a period where the CEO is no longer involved with it. I think that's possible. It's hard, of course, but this is a community of decentralization. And like all things start, most things start centralized and decentralized over time. Like Satoshi was very centralized at the beginning, of course. And then, even I like look at George Washington. You have to have a moment where George Washington leaves and sort of like gives it up to other people. But it's fine if it takes 8 years to get there, right? Actually, that's probably the golden number. If you look historically of like how democracies form, which is a form of political decentralization, usually you have a ruler that rules for like 10, 20 years, sometimes less. Like George Washington, the first one is this guy Solon of Athens. We don't have to talk about that. They all like institute democracies, and they rule for 10 years to make sure things go okay, and complex systems get adapted and institutionalized. Then they peace, they leave, they travel the world, they go anonymous like Satoshi. I think that's probably a good model. It's like a 4,000-year-old model of decentralization. It probably applies here.
I've never heard anyone describe it that way. I love that.
Yeah.